I'm the Chuck in the Markets Up Chuck, and today's blog was titled Rimm Rallies, and at one point it was up over 12% today, and last time I looked it was up around 10%, and it was based on the fact that they really had a blowout quarter. Their revenues and earnings massively exceeded analyst estimates, and they were still growing at better than 50%, I believe 60% plus, and this is remarkable for a company that has historically since 1999 compounded earnings at almost 65%. Now, a lot of people are worried that Rimm's earnings growth is going to slow down. The Apple iPhone has had a major impact. Now we also have Google Android. But I want you to notice something. Rimm's earnings have continued to grow, and they've actually grown quite quickly if you think about it. Normally this stock would be trading at almost 50 times earnings. It's currently only trading at 15 times earnings. Now, logically you would expect that their business would have to slow down. However, if you look at the last 5 years of growth, and I'm going to draw a 6-year chart here. Remember, I always include 1 year of estimate in my chart, so the chart's always 1 year longer than the history. So we've got almost a complete 5-year period now. This company's earnings have grown at 55%. Now, it's, as of yesterday, it was trading at 16 times earnings, 15.9. It's currently closer to 17 and a half times earnings because it's up strongly, as I mentioned today. But look at the track record. Even with the valuation low, this company still generated an 18% rate of return over the last 5 years versus a minus 1.9% compounded loss for the S&P 500. But here's the real point. The smartphone market is going to be huge. Morgan Stanley has a great article out, or excuse me, report. It's 400+ pages long, and it talks about the killer technology is going to be the mobile technology, which is it's either the fifth or sixth. I think it's the fifth since the 1960s that have been major. The mini computer, the PC, and now we've got the mobile technology as mainframes, of course, in the 60s. But the point I want to make is this: at today's price, Rimm is currently forecast to grow in excess of 20% by the leading analysts that followed the first call. That number may actually increase after this quarter because they handily beat expectations. But the point I want to make is this: at 15.9 times earnings, Rimm is trading at a PEG ratio that's less than 1. If it does grow at 20% a year and ultimately it stays at 15 times earnings, you'd make 20% a year from here. By the way, the company has no debt, spends a lot of money on R&D. Their business was extraordinary this last quarter, as I mentioned. You can check that out in a lot of different sources. So the point is, this is a growth story. The real question is not whether Rimm is better than Apple or not whether it's better than the Android or HTC or Motorola's products or any of the other smartphones out there. The real question here is how big is the smartphone market going to get? Rimm is currently still the dominant leader in that market, I might add. And at today's low valuation on historical lows, is this a good buy or not? I think it's a investment opportunity that's certainly worth looking at. This is Chuck Harville saying thanks for listening. As usual, it's Friday. Next week will be Christmas week. We'll be blogging probably sparsely throughout the week next week. I'll be taking some time off, but I do plan to talk to you once or twice. In the meantime, everyone have a great holiday, and I look forward to talking to you again soon. Thanks for listening.